Hi guys, welcome back to the channel. Today we're exploring the current geopolitical landscape shaped by sanctions against Russia, the resilience of the Russian economy, and the rebranding of US companies still operating in Russia. We'll also explore the broader implication for Europe, including whether it's in a recession or not. First, let's focus on the European countries most affected by these sanctions: Germany, France, and the UK. The sanctions against Russia, intended to penalize its economy for the invasion of Ukraine, have also reverberated through European economies. Germany, in particular, has felt the sting due to its heavy reliance on Russian energy. The cessation of the Nord Stream 2 pipeline and the cutoff of most Russian gas have led to higher fuel prices for energy-intensive industries, contributing to Germany's economic contraction by 0.3% in the fourth quarter. And the start of this year looks no better, with indicators of business activity still flashing red for contraction. Plus, disruptions to shipping in the Red Sea have constricted global trade through the Suez Canal, a major route between Asia and Europe, surging shipping costs and threatening to boost inflation. France and the UK, while also impacted, have more diversified energy sources and economies, somewhat cushioning the blow. However, all these countries face challenges from increased energy prices and disrupted trade flows. Now, the question many people are asking is, how did Russia survive these sanctions? Despite significant sanctions from the West, Russia's economy has shown surprising resilience. A combination of factors has contributed to its endurance. Higher oil prices and a surge of defense spending have floated the economy, while Russia's private companies have adapted to new economic realities. You see, Moscow has already been pivoting eastward before the Ukrainian war to boost economic growth. The invasion has expedited the geostrategic shift, with President Vladimir Putin finding willing trade and investing partners, apparently undeterred by the threat of sanctions. Trade between China and Russia rose nearly 30% to exceed $200 billion in the first 11 months of last year, with the Chinese export to Russia surging by 50%. Half of Russia's oil and petroleum export went to China in 2023, with 40% going to India. Overall, Russian and India bilateral trade doubled to over $50 billion between January and October of last year, and is expected to continue to grow. This shift, along with development of a shadow tanker fleet and parallel imports, has allowed Russia to circumvent some of the West's restrictions. In response to the sanctions and as a protest against the invasion of Ukraine, several American companies exited the Russian market. This exit led to a fascinating phenomenon of Russian rebranding of these companies. For example, McDonald's became Tasty and that's it. Starbucks transformed into Stars Coffee, and other brands follow suit with similar rebrandings. You see, during Mikhail Gorbachev's rule of the Soviet Union, these American brands like McDonald's and Pizza Hut set up shop in Moscow, giving the citizens a glimpse of Western culture.
The Golden Arch's arrival in Moscow in the dying days of the Soviet Union, and Muscovites' eagerness to get through the doors, was a meaty manifestation of American capitalism's victory over Soviet communism. But the closure of its Russian restaurants 3 decades later, in the early months of the war in Ukraine, was a stark reminder of the ideological differences that continue to separate East and West.
More American franchises began to pop up in Russia after that. But as diplomacy and connection to Russia began to fade, American companies are disappearing. Russian knockoffs of Western brand are growing rapidly as they snatch up former franchise locations left behind by retreating Western countries. For example, Coca-Cola, formerly Coca-Cola, plans to more than double its bottling capacity. Tasty and That's It, formerly McDonald's, made a deal last year to acquire 25 former McDonald's locations in Belarus. These off-brand versions signified not just the sanctions' impact, but also the adaptability of the Russian market in the face of international pressure. Looking ahead, the question of how to navigate this complex situation remains. Strengthening the enforcement of sanctions and closing loopholes could increase pressure on Russia. However, the solution also requires diplomatic efforts to resolve the underlying geopolitical tension. As for Europe, while not officially in a recession, the economy has stagnated, with zero growth at the end of last year. The continent faces the delicate balance of supporting Ukraine, managing its economic challenges, and securing alternative energy sources. In conclusion, the sanctions against Russia have had a profound impact on both the Russian economy and those European countries, particularly Germany, France, and the UK. While Russia has managed to mitigate some of the sanctions' effect through strategic partnership and economic adjustments, the long-term implications remain uncertain. Europe, meanwhile, grapples with economic stagnation and the search for energy security. The situation underscores the complexity of global economics and geopolitics, where actions and counteractions intertwine in unexpected ways. That is all for today, guys. Thank you for joining me in this complex world of sanctions and its impacts, Russia's economic resilience, and the broader economic implications for Europe. Please don't forget to hit the like and subscribe button. I'll see you soon.